Hey, everybody, it's Eric Bean, CEO of Happy. I'm going to discuss this executive order that was issued March 9th by President Joe Biden. It's entitled Executive Order on Ensuring Responsible Development of Digital Assets. It is an interesting order. It basically lays out the parameters for something that a lot of people in the crypto community have wanted for a long time, some regulation around the industry to protect consumers, avoid scams, things that have happened in this industry fairly regularly in a open market product like this, a distributed product, and that's kind of the basis of what a digital asset is. Then there's other parts in this that are also interesting as well. So we'll dive into the different parameters of this, discuss the pros and cons. There's people on both sides. Some people are cheering this. Other people are despondent by it. Overall, as we've seen in the last week, the reaction to this from a market perspective, and there are a lot of other market forces at play, including today, Powell raised interest rates, so the Fed funding rate by a quarter point. Everyone was expecting a half point, more aggressive. This is a very light raise and a bullish raise for the markets. I think he really wanted to set an expectation that was going to be much more harsh on inflation and took a much more dovish view on how he was going to handle it. It's not going to do anything for inflation, at least in the short term. But you'll see the markets will react favorably, and I think sometimes that's the more important mitigating factor for these Federal Reserve people. So back to the executive order. March 9, 2022, Section 1 was policy. So it basically lays out that there's incredible growth in these markets, which we all know. Talks about some of the national security crime risks and basically directs the different offices to take a look at all those risks and assess them. And lays out the market: 3 trillion cap, 14 billion in November of 2016. So the growth from 14 billion to 3 trillion in about a little bit less than 6 years' time, 5.5 years, is some pretty substantial growth. One of the most interesting parts of this for me is the push in this EO to look into CBDCs. Now, CBDC is a central bank digital currency. This has been in the works for a long time. So to see it kind of pushed here at the end in an EO was interesting. It basically means the United States government is going to move into what China has done, which is the digital yen. Now, there's two sides to this. One, it does make some sense from a federal perspective not to just keep printing money, but then they can print digital money. People that are on the consumer side have great concern over the CBDCs, including trust of the fact that the Federal Reserve will actually honor and manage their currencies properly. One of the beautiful things about Bitcoin is that it has, and a lot of these other coins, is they have a limited amount, a limited supply. In Bitcoin is 21 million. In the federal world right now, we've printed, I think, 40% of the dollar bills in existence over the last 13, 14 months. So the ability to actually destroy a currency isn't there on the distributed ledger side, whereas with the federal side, it's absolutely there, it's in play, and that's why you're paying so much more for everything from gas to groceries. And obviously there's other factors as well, but supply chain factors and other things. But one of the big reasons you're paying more is because of inflation, and the big thing that causes inflation is money supply. That's not a controversial statement. So when you go to the federal CBDCs, there's a lot of reluctance, but China's using it. A lot of their people over in China have not adopted it very well. They would prefer to go the crypto route. This could be also another bullish sign for Bitcoin as people sort of move and decide where they're going to go to get away from the dollar, which is happening on a global scale at a very high rate. It should concern everybody here in the United States and every country that's tied to the U.S. dollar, which is pretty much the global economy to some degree or another. We recently saw today, Saudi Arabia said they're going to trade oil in the yen. I don't know how much longer the dollar has. India is working out deals with China, Saudi Arabia. You're looking at between Russia, Saudi Arabia, India, and Iran. You're looking at over 50% of the world's population will be working and moving off of the dollar. And then part of that might be the repercussions for kicking Russia off of SWIFT. People said, wait, I don't want to have that type of power wielded over me. Let me see if we can work out some other issues here and have a plan B so the United States doesn't do that to our economy. But that's supposition. I'm not a global expert on that stuff. It's just what I've seen, what I've watched, where we're going, and something to be aware of is as the dollar is weakened, which is absolutely not a controversial statement, cryptocurrencies become a much more compelling place to be. Now, this is where this EO becomes really unique, is because if they actually do lay out the parameters for regulation on the crypto side, the bullish argument here is that a lot of these institutions that are publicly traded and or on the sideline that have stayed on the sideline because of some of the Wild West nature of Bitcoin and other things will actually have a foundational roadmap and the comfort that the United States government is going to be okay with this, that you're going to see trillions of dollars inflow into the cryptocurrency market. The first, obviously, to do this was Michael Saylor. He dove into this, and for those of you who don't know, Michael Saylor is the CEO of MicroStrategy. I've met him on numerous occasions. Very, very, very smart guy. Have a lot of respect for him, and he was really a pioneer in publicly traded companies coming into the Bitcoin market and figuring out how to do it, how to account for it, although they've had some issues on that, and to go out and educate other companies, including Elon Musk with Tesla, on how this works so that companies can use and securitize what are currently assets that are depreciating in value, the US dollar, for assets that may or may not depreciate or appreciate in Bitcoin, Ethereum, and other blockchain technologies. So if you lay out the parameters of regulation on all these different coins and tokens throughout the market, there's a really big chance that you're going to see a lot of money flow in, assuming the regulations are reasonable, easy to follow, and not what we've seen with our government a lot of times, some innocuous, vague things that leave so much room for interpretation that it's inherently going to take a series of a lot of court cases to figure that out. I just came from an industry that was very much like that. The TCPA came out. It was vague. It had to go through about 10 years of litigation before you had any sort of real color as to whether or not you were violating the law or not as a texting company. And I think you may run the risk of having some of that here, assuming that they don't write this up properly. The other risk, obviously, is that some of these departments that are analyzing this come back and say, errantly, that this is a major threat to national security. Now, some people do believe that because they think that there's a threat of another currency taking over the US dollar. And even a lot of people on the Bitcoin side will say that Bitcoin eventually will replace the US dollar. So there's inherently an aspect to that. So, when they're looking in this EO as well, they're also looking at not only consumers, investors, and businesses, they're also looking at the environment. And Bitcoin is notoriously heavy on energy use. Now, on the flip side of that argument, Bitcoin users, because they require so much energy, have been at the leading forefront of energy efficiency, working out how to get overflow energy, working out renewables and different ways to use, running water, wind, solar, everything they can. Because if you're just paying, renewable energy for your Bitcoin, your profitability goes way, way down, especially depending on where you are. Also, you're starting to see areas that were previously uninhabitable become hotspots because of Bitcoin. So who wanted to live out in the middle of the desert? Nobody. Now with Bitcoin, you can go out and put some solar panels up, and you actually have a viable community that can self-sustain off of renewables and in a place where people normally wouldn't even think of living. Same thing with areas with massive running water that may have been up high or in an area that wasn't so desirable. Now, all of a sudden, there's brand new opportunities for human beings to set up shop in a place where nobody wanted to be, but now it's all of a sudden, something that's kind of a hotspot, considering that they can mine and create revenues with Bitcoin and or other products out there as well. So part two of the EO is that we must protect consumers, investors, and businesses in the United States. Anytime the government says they're going to protect you, you have to go, oh, what are you going to do about that? Considering they're going after XRP right now and hurting all the people that invested in XRP. Now, on the bright side, it looks like the FCC is going to lose that case across the board, although you never know until the fat lady sings. No offense to fat ladies out there. But that case is not going the government's way and should put a pretty good damper on the FCC's tentacle limit to what they can do in the crypto market now and in the future. So they're going to look at cybersecurity. The beauty is, and I think a lot of people mistake cryptocurrencies as being a hotspot for laundering money and things. Really isn't. It's a public ledger. There are some privacy coins out there, but a public ledger means you can literally see money going from here to there across the board. Cash is much easier to hide. Anything of value is much easier to hide because all you have to do is hand it to another person where there are no cameras and nobody's being watched, and that transaction happened and you have no idea. With Bitcoin or anything else on a public ledger, you literally see every transaction from wallet A to wallet B, and as long as you know who wallet A and wallet B are, you know who received that money, how much, and etc. We must protect the United States and global financial stability and mitigate systematic risk. All sounds very nice. Platforms, intermediaries, etc., risks to financial stability. It's important to know the risks. The question is, what are they going to do about it when they actually get the information back from these different groups? I'm pretty sure that these departments have been working on this for quite some time, and it's not going to take as long to assess this as it normally would. Illicit risks. So drugs, money laundering, cybercrime, ransomware, narcotics, human trafficking, terrorism, and proliferation financing. Again, much easier to track and manage through crypto than cash. I mean, even the United States flew cash over to Iran in a plane, hypothetically, and nobody knew until they got caught. In this case, you'd be able to see it. I think something like 0.3% of all crypto transactions last year were illicit. And the fact that they know it was 0.3 tells you that they're able to track it pretty well. There are some coins out there that are privacy coins like ARG and Monero. And quite frankly, I don't know how private they really are. We have a pretty good technology group up at the FBI and the NSA. They may have even set those coins up for all we know, but either way, they actually do a pretty good job of figuring that out. But you do have to make sure, especially, human trafficking and things like that, you have to have a process for it. There's also an order for the FBI to increase their breadth to be able to actually track this type of crime down. We must reinforce United States leadership. That's true. This is important for digital platforms. So it's good to see the United States actually seems to realize that this is here to stay. It's going to be a massive part of our future. If they get this right, it's going to be massively bullish for the crypto community, even in the world of turmoil, and might I say, especially in a world of turmoil, right at the cusp of a major war. We must promote access to safe and affordable financial services. I agree. Now, the antagonists on this will say that because of the volatility of crypto and because the ethnic minority communities have been so often screwed over in check cashing and different ways for people to actually lose their money and or be taken advantage of and exploited, that's been happening under the current system, not the crypto system. So it's kind of funny that they're like, the minority group is taken advantage of by everything we currently have. But so we shouldn't do anything with crypto. Well, crypto's not like that. The fees are incredibly low. It's access to everybody. The volatility is real, but over time, that volatility is up and down and tends to go up. Whereas I can tell you right now, mathematically, the dollar is not going up in value. So it's a much safer thing as long as it's not going to be confiscated by the U.S. government after this EO. And it doesn't appear that's where they're going, at least right now. We must support technological advances that promote responsible development. I agree. Hopefully, they don't come down on software companies like myself or platforms because they're also looking at exploitation, negative climate impacts, environmental pollution. Again, I get this. I understand why they're doing it. I think they should really look at a bigger picture of how much good Bitcoin does as well. But you see Ethereum's switching over apparently in June from proof of work to proof of stake. There's pros and cons to it. We could discuss that on another episode, but they're going to probably take that pretty seriously. And I think that's going to be one of Bitcoin's biggest issues coming through this little process is that it clearly uses a lot of energy. I've mined crypto in the past, and it gets a little hot in the server room. Coordination, assistant to president, national. So that's the coordination part, policies. The rest is just central bank digital currencies. We've talked a little bit about that. So this is within 6 months. They'll have the Treasury and all the different heads, national intelligence, etc. will send in a report. Looks like we're going heavily towards CBDCs. Now, as long as that's not associated with a digital passport where you can be turned off or on as a human being, I have no issue with that. People can have access to their money in a safer way. It's not very safe to hand somebody your credit card and say, "Hey, swipe this for me." You can pretty easily have your savings taken, especially if it's a debit card. And even a credit card, people go on shopping sprees all the time. So this was signed overall. I think it's a wait and see for me. It's a wait and see. We have to see what the different agencies come back and say. The overall feeling from this is good because if you lay out the parameters as this is discussed and lay out the framework for a positive development of the ecosystem, that's nothing but good for the overall crypto community, and that's probably why the market's reacting positively in some way. If these agencies come back and start hammering on Bitcoin, they're going to be kind of SOL. Bitcoin's banned in Pakistan, it's banned in India, it's banned in China. It doesn't matter; people still use it, so it'd be kind of hard to enforce that. Hopefully, they're smart enough to figure that out. That's not a good thing. Plus, with Bitcoin Layer 2 coming along, you have pretty much instant and very low cost ability to send and receive money and settle those transactions in seconds. So it's not very viable to go after Bitcoin or Bitcoin mining. It would be a big mistake, I believe, to kick out all the miners that are in Texas, Florida, in Nevada, etc., and send them into Iran or the Arctic, where they can get cheap cost of energy, but be in a place that nobody wants to be. We have to, kind of keep that open. They're probably more worried about the tax revenues, to be honest, but that's fine. No, they can figure that out, and that's a fair concern. So right now, overall, more bullish than not. We're in a wait and see. I'll keep you guys posted as we find out more on what these various departments are going to come back and say. Always a little skeptical when the government gets involved, but hopefully a little bit cautiously optimistic. And I'll come back as soon as we have more information, update everybody on what we have, what to look forward to in the future, and what the pitfalls are. Hope you enjoyed this. Hope everyone has a great Wednesday evening, and we'll catch up again soon. Thank you.